Shares of Luckin Coffee have fallen massively since the company disclosed last week an internal investigation that found its COO had fabricated sales.
Let's stop it there. What's up, everybody? Doriso here for another episode. I can't believe we're already up to episode 29. Lots to go over in this one. Here's a quick summary of what I'll be discussing for this episode. First, I'll discuss my thoughts on Luckin Coffee, ticker LK, which, as you heard from the opening clip, is being investigated and its stock has been halted. Luckin Coffee hasn't traded since April 6, 2020. The stock price was suspended at $4.39. Lots of investors are wondering when the halt will end. I'll give you my perspective and opinions. Next, I wanted to welcome all the new subscribers to this channel that are looking to grow their stock portfolios from zero to infinity. If you're new, I've been building one of my stock portfolios here on YouTube from zero to infinity, which is my motto for this channel. If you're looking to grow your stock portfolio as high as possible, just like me, click that like button. I'd be interested to see how many people are on the same mission. Let's see how high that like counter will go. This channel had its first video that broke 5,000 views 2 episodes ago. Episode 27 was about Luckin Coffee. I wanted to go over a brief overview about this channel and the plans moving forward for all of the new subscribers. To end, as I do in every episode, I'll provide a quick portfolio update and a rundown of the stocks I'm planning to buy in April 2020, with a few tips and lessons that I learned over the 10 years since I've been investing in the stock market. Buckle up, let's get started. Number 1, Luckin Coffee. In episode 27 last week, I made a video talking about if it was time to buy Luckin Coffee when the stock plummeted over 80% since Luckin is one of Starbucks' competitors. I do own shares of Starbucks stock, and I follow all my stock holdings competitors very closely. At the end of that episode, I mentioned I did not buy Luckin Coffee stock because I wanted to wait until the whole picture comes out so I could review the real financial numbers. I always prefer to make logical investment conclusions based on facts. That's just me, though. You may have a different approach to investing. I never recommend you follow anyone's advice. That includes following my investments too. Don't do it. Luckin last week discussed an internal investigation discovering that the chief operating officer of Luckin Coffee was making up sales numbers, fabricating sales to the tune of hundreds of millions of dollars last year. Since episode 27 was uploaded, Luckin Coffee was halted, and people are saying the stock could be delisted and potentially go bankrupt. Luckin Coffee's stock hasn't traded since April 6th, 2020. The latest update I received was that Luckin Coffee stock will remain frozen until it satisfies the Nasdaq's request for additional information. The exchange declined to specifically say what information is being requested. Once a stock is halted for pending news like this, the majority of the time, the news will come either via a new SEC filing or a press release from the company or the exchange. Unfortunately for us, identifying when a halted stock will resume trading can be a bit of a guessing game. For any beginners out there, when a stock is delisted from an exchange like the Nasdaq, for example, it usually will resume trading on the OTC market or the over-the-counter market. Normally, if you use a broker that allows trading in OTC securities, the only thing that will change will be the ticker. I've seen this before with some of my past investments. If a broker does not allow OTC listed stock trading, shares will likely be automatically sold at market price once trading resumes. These policies vary from broker to broker, so investors who are long or short Luckin Coffee stock should simply contact their broker and ask or confirm how the delisting will be handled. I know there's probably a lot of people using Robinhood or M1 Finance, so make sure to reach out to them as soon as possible so you know the next step. As mentioned, there is so much uncertainty at this time, especially for all the investors that currently have shares of Luckin and are waiting for the newest update and information. I'll continue to monitor the situation. If there's interest on a future update when new information is released, just let me know in the comments below and I can make a new episode going over the situation. You never know what the future holds, so It will be interesting to see what happens to Luckin Coffee's stock price over these next couple of weeks. I'll definitely be monitoring the situation like everyone else. Okay, on to the second topic for this episode. The second topic I wanted to hit on was to welcome all the new subscribers and go over a quick summary about my channel and a few of my personal investing principles that I try my best to follow. First, to you listening, welcome and thanks for taking the time out of your busy day to tune in for this episode, and maybe you already saw a few of my previous episodes. If you recently stumbled upon this channel, you're probably interested in investing in the stock market, and you may be building a stock portfolio as high as possible. I'm looking to grow one of my stock portfolios here on YouTube from 0 to infinity. For me, infinity means there is no limit to the amount this stock portfolio can grow, and that goes for your stock portfolio too. The number from each portfolio update will be displayed in each YouTube thumbnail, so you could track the portfolio's growth as the weeks, months, years, and decades continue on. You may be trying to catch up to the future me, which should be at a much higher portfolio size compared to this episode. That's the plan, at least. I realize that a lot of new subscribers may not want to listen to all 29 episodes, which includes a lot of my personal thoughts, tips, and opinions about portfolio management, growing a stock account over time, and buying stocks when things get bumpy like the stock market crash that we just had. I'll have to make an episode in the future covering all my investment principles, but here's a quick recap. I'm a long-term investor, and I prioritize holding stocks rather than selling my positions. I believe no one can predict short-term fluctuations perfectly on a consistent basis. My investment philosophy highlights the fact that I am a part owner of a bunch of companies that I fully research and understand. I believe controlling appreciating assets like stocks is a key driver to wealth creation. I don't invest money I need tomorrow. I'm willing to wait years to take profits. Patience is key. Never be in a position that you are forced to sell just because a stock fell in price. I focus on time in the market versus timing the market, so compound interest can take over and grow my portfolio. Since I'm young, I have plenty of time to recover from any losses, so I prioritize growth stocks, and dividend income is always a plus but never a requirement. My goal is to grow my stock positions higher and higher by depositing more money every single week and month if possible. In the early stages of portfolio management, contributions or the deposit amounts are much more important than performance, especially under $100,000. Performance starts to kick in as my portfolio will continue to grow over time. The more you save, the more you can invest. Always look for the next big investment. Awareness online and offline is very important. I believe investing is not rocket science. Know the current trends, young and even old. Another principle is I don't have to beat anyone else's performance. Wall Street does. You lose your job on Wall Street with poor performance short term, meaning in the last year or two. I don't care about anyone else's performance. And the last principle I follow, to recap, is the stock market moves in only 3 directions: up, down, and sideways. Buy during the downs and sell on the ups. That is, if you need to reallocate your stock portfolio. As of this time of the recording, I have yet to sell any of my stock positions. So that was a quick recap of a few principles and tips that I follow so anyone listening understands my personal investment strategy. My strategy will be much different from your strategy. I never recommend copying my investments for that reason. I have different goals from you, and you have different goals from me. On to the third topic, 3 stocks I'm buying in April 2020. As I always do in every episode, let's highlight a quick portfolio update and hit on a few points that beginners may not know. Short-term news announcements, articles, and videos are always being released, so I'll go over a few news items that directly affect my personal stock holdings and the 3 stocks I'm buying now. We're only up to a little over $3,700 at this time of this recording, which was a pretty significant jump percentage-wise compared to my last episode, which was around $3,200 based on my last YouTube thumbnail. $3,700 is still a very, very small stock portfolio, in my opinion, especially when we look back on this episode. My current holdings are Apple, Fiverr International, Starbucks, and Penn National Gaming. All thoughts and opinions on why I bought these stocks and put them in my stock portfolio have been discussed in previous episodes, so I'll do a quick recap of the 3 stocks I plan to buy in April 2020. We recently saw the stock market, or S&P 500, move up this past week, and a lot of my positions moved up with the overall market. And yes, if you're wondering if I was buying stocks during the market crash, the answer is yes. In my opinion, the best time to buy stocks is when my stock holdings fall in value so I could pick up cheaper shares and reduce my cost basis if possible. So let's get straight to it. Stock number 1, Apple. Apple stock is my biggest holding at this time, mainly because of the healthy balance sheet and recognized brand around the world, and not just the United States. Over time, you'll learn that I like global companies. My goal is to continue to buy Apple stock in April 2020 and in future months as we continue to deposit more and more money into this stock portfolio. A quick topic I wanted to talk about are analyst ratings. If you're a new investor, you may not know that large financial institutions like Goldman Sachs or JP Morgan, to name a few, they have employees working for the company called analysts that research companies extensively, just like you and me and other YouTubers in the stock market and personal finance niche. Larger cap companies like Apple, over $1 trillion at this time, will have a lot more analysts researching the company compared to small cap stocks like Fiverr International, for example, which is a small cap stock under $1 billion at this time. Just a quick personal tip. I prefer to look at market caps compared to stock prices because 2 companies could be the same exact stock price, but they could have much different market cap valuations. I never stay away from investing in a company strictly because of the stock price. A company like Amazon, which is at $2,042.76 at this time, is comparable to having 7.6 plus shares of Apple stock, which is right now $267.99. Always remember that $2,000 invested is always $2,000 invested regardless of the company you choose. In this case, you might get 1 share or you might get many. Are there higher risks with lower market cap stocks? Absolutely. Over time, you'll develop your own personal investment risk tolerance if you don't have one already. That's for you to learn yourself. So back to stock market analysts and Apple. Analysts will update price targets on a regular basis throughout the year. Over time, you learn that certain analysts and even other investors and names have a bigger following and voice that can actually move the stock price up or down considerably in the short term if they are highly recognized and respected in the business. Think about it. Let's say you follow and respect an investor or analyst named Warren Buffett, who has a large following, and he makes an announcement that he recently bought or sold a particular stock. What do you think happens? I'll let you guess that one. Just so you know, I never blindly act upon someone else's personal stock picks, regardless of his or her name. Do I incorporate his or her opinions with my personal opinions? Absolutely. You'll always have investment ideas that you agree with, that you'll research deeper, and there are other investment ideas that you will toss to the side. Over time, you'll probably have a list of investors and analysts that you track and follow, just like your favorite player in football or basketball. There will always be elite players, even in a sport called stock market investing, that are the best of the best and have the most fans. My guy Saquon, where you at? Big season coming. Your Cavs keep getting bigger and bigger, my friend. Always remember that analysts and investors raise or lower price targets all the time based on the current market environment. Lots of price targets were lowered during the recent stock market crash. There are normally 5 known stock market recommendation labels: sell, underperform, hold, outperform, and buy. Keep that in mind. From previous episodes, you know I'm bullish on Apple stock. Remember, this is not investment advice. I'm just someone on the internet giving my opinion. I'd like to get my Apple stock position to 5 figures, which is over $10,000 as we progress with these episodes. Any dips in price are buying opportunities, in my opinion. I digest news headlines on a daily basis and review the technicals to decide when I'll be adding to my Apple position. I'll provide updates in future episodes. Right now, I have 5 shares, which I know is very small, especially since this portfolio is heading towards infinity over time. I won't get into the technicals for this episode, but if there's enough interest, maybe I'll hit that topic for a future episode. I look at charts to find entry points when I buy stock. Apple is set to release its official Q2 fiscal 2020 financial results on Thursday, April 30th, 2020. I'll be tuning in to the earnings call later this month. My next biggest stock holding in this portfolio is Fiverr International. Fiverr stock is my second stock that I plan on buying in the month of April 2020. I think the freelance market will continue to grow, and I am looking to grow my position in Fiverr higher and higher over the next couple of years. During the stock market crash, Fiverr fell to $21.69 and recently bounced up to $30.41 at the time of this recording. I have 39 shares and my cost basis is $27.18. Fiverr is a tech company and I wouldn't be shocked if we see a retest around $35 in the coming weeks looking at the chart. My bull thesis on Fiverr can be found in previous episodes. At this time, my bull thesis is still intact. It's a bit more speculative with a market cap of $971 million, so you're under $1 billion, but I think when we look back on this valuation, we may be scratching our heads and say, wow, 3 to 5 years from now. Is that a good wow or a bad wow? Time will tell. The third stock I plan to buy in the month of April 2020 is Starbucks. With news that broke on Luckin Coffee, I think Starbucks will continue to grow and open more and more stores around the world, another global company. More info on Starbucks can definitely be found in some of my recent episodes since it's my newest stock position. My goal is to build my Starbucks stock position over 5 figures, just like my Apple position over time. It pays a nice dividend, and I think the management team has done a fantastic job trying to weather the storm. I think the delivery part of Starbucks' business model has plenty of room to grow over the next few years. I recently just drove by my local Starbucks, and the lines were out the door. Good signs, especially when it comes to social awareness, knowing what's going on around you. So those are the 3 stocks I'm focusing on now: Apple, Fiverr, and Starbucks. When I invest, I always try my best to think ahead of the curve to better my life in the future. As always, this episode is not intended as investment advice. Do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for educational and informational purposes only. Maybe I didn't earn your subscription with this episode, but there's always next episode. It's free to subscribe, and follow me on Instagram while you're at it. My favorite comment from last episode is on your screen. Maybe you'll have the best comment in the next episode. Look out for it. I appreciate your time for this episode. Thanks again for watching. Remember, I'm just getting started. Let's keep building from zero to infinity. Peace.